Good morning. Welcome back to another Stock Market Open live stream. Today we have a very special set of data coming. We have the labor revision data. We expect that data to be out at 10 a.m. Eastern or 7 a.m. California time. So we'll get to cover those benchmark revisions. We'll also get to see mortgage applications already came in for the period of August 16th. Mortgage applications fell, and that's on a weekly basis as we saw interest rates start ticking up again a little bit. Pretty typical, very, very volatile on a week-over-week basis. I always like to look at the 10-year to kind of guide expectations for this. What you could do here, let's get a full quote. There we go. 10-year Treasury. Can kind of see the trajectory here over the last year. We really peaked out there in May. This was after we started getting some warmer inflation data, started seeing some move to the upside, but since we've been moving right down. Go to the last 3 months here, you can see this in a little bit more detail. You can see we're sitting down there at 381 on the 10-year. And I would expect that today's benchmark revisions might move us into a place where we have a pretty big movement in Treasury yields across the board. In fact, if we get benchmark revisions today that indicate that we might actually be closer to a recession than a lot of people think, then there's a risk that yields fall dramatically. But the opposite could also happen. It's entirely possible that maybe we end up getting some form of oopsie-doopsie report where it's substantially hotter than we think, and then yields rise. So we'll see. But that'll be a big deal. We'll get to see that again at 7 a.m. California time. So as far as the pre-market in the stonks, we can see the Qs are rising a little bit right now, up about 22 basis points, somewhat at the highs of the pre-market. You've got Apple slightly up there as well, about 0.25%, 0.5% on Meta, Tesla about 1/3 of 1%. And Bitcoin, this is an interesting one, sort of bobbing around here in no man's land. Usually we see it move between this 57,580 and 67,19 line. And on Monday, we were bouncing off the 57,580. Yesterday, we were bouncing around the 67.19, and today we get in the middle. So, we'll obviously watch this and see how moves play out. So, all right, yeah, that's somewhat of an expectation for today. Let's see what we have in the way of earnings. We have Target that came out. Let's take a peek at that because you get Target, Macy's, and a TJ Maxx. So let's go take a peek. All right. So Target shares jump 14% after boosting annual profit. Well, this is a Q2 comp sales beat. Fiscal year adjusted EPS is expected to be let's see, $9.35. Let's write that down. Fiscal year adjusted EPS guided at $9.30. Is that right? No, $9.35 versus $9.22 expected. Then we got Q3 EPS that's expected to be Q3 guide adjusted EPS expected to be at the midpoint $2.35 versus $2.24 expected. So nominal beat there on adjusted EPS guide. Let's see, comp sales actually lower. See, that's really interesting. So Target didn't beat on the top line, really. They beat on the bottom line. Yeah, they beat on the bottom line. Although they did beat actually on revenue for Q2. It's just Q3 that's missing top line. Interesting. Okay, all right, try to piece that all together. Okay, so let's write this down. Q2 sales beat at 25.08 versus 24.88 bill expected. So that's good. Q3 forecast sales expected to be 1% versus 1.91% expected. So, and put a quick note here. It seems like the big beats are on the bottom line, with mixed results on revenue. Let's see here. They keep a cautious outlook. Consumer hunting for value. Yeah, that makes sense. Cautious outlook / consumer hunting for value. Big beats on bottom line with mixed results on revenue. I think that's a fair way to look at it. In my opinion, look to see if there were OPEX layoffs or cuts. Okay, let's go look at it together. But that would be what I'd be looking for. Let's see, where did they cut to guide basically low on the top, but make more money? And so usually the way you pull that off is you fire people. But that's a pretty nice jump. Let's take a look at this. Yeah, look at that. Wow. From 140 to about 164. I have a line at 159 for target. Okay, let's get into the press release. Let's see here. Nope. No, actually, let's do this. There we go. Okay. Traffic grew 3% in the second quarter as compared to the prior year. That's good. All 6 core merchandising sectors delivering growth. Well, that's good too. So people are still going. Still got some growth of people coming through. Digital comp sales grew 8.7%. That's also good. Okay. Discretionary sales continue to improve meaningfully, with apparel sales growing more than 3% in the quarter. It's also pretty good. Let's see. There we go. Okay. Committed to get back to growth in the second quarter, and the team, while expanding operating margins and growing EPS by more than 40% compared to last year. Our growth was driven entirely by traffic in stores and digital channels. Improving trends amongst discretionary. Maintaining a measured outlook has served us well. Comp sales increased 2%. Let's see. Capital redeployment, webcast. All right, let's look here. Okay, here are their sales. $25 billies, 2.6% increase year over year. 6 months year over year, they're actually flat. Oh, that's really interesting. So that means the 2023, let's see here. The 6 months ended, 3 months ended here. This is the 3-month period. This is the 6-month period. So 6 months ending August 1 was flat. So the summer and spring season was flat. Well, no, that's actually if you include March, April, May. So March, April, May was weaker than the last 3 months. So they had a decent summer. They grew 2.6%. Okay, fine. Cost of sales grew 0. Well, that's good. That's great. So their gross profit actually increased. And their SG&A did move up a little bit. Let me see here. If I go, let's see, SG&A. Let's go with 53.92 divided by 51.84. Oh, well, they actually gave a percentage. 4% growth on SG&A. Wow, so they really had their cost of sales decline rather than their than a reduction in staff here, which is good. That's great because that's the good kind of deflation. You want to see gross margins go up without having to lay off people, or you want to see positive operating leverage. I mean, their SG&A still went up 4% while their revenue went up, 2.7% in total. But this is good. Cost of sales were a little lower. That could be due to lower commodity prices, manufacturing prices, whatever. Shipping prices tapping out or capping out. All right. Cash flow. Well, got about $2 billion of free cash flow. Let's see here. Well, actually look pretty good. That's where you would want to see it. So I like that. That's fantastic. All right, so that's Target. I'll go through their earnings call later, but I'm going to save that. So Target Q2. Oh, yeah. There we go. Okay, next. So that's Target. Well, let's go with Macy's. And let's write that down as well. Sales year over year in the quarter up 2.7%, but cost of sales, gross margin, up 0%. OpEx up 4%. Or I'll say SG&A. There we go. Okay. Very interesting. It's I would almost call it the best kind of deflation, right? Best kind of deflation. Driven by lower input costs. Yes. All right. Now Macy's. Alrighty. No, jobs data comes out at 10. Eastern time. Okay, Macy's. Let's see what a Macy's has for us. Oh, I would also like to quickly look at the Target valuation just to see what markets are giving it now. Let's see. Hit soundboard. Let's go. Gotta love the soundboard. Alrighty, let's see here. So Target, 165, $9.24 of adjusted EPS expected, puts us at about 17.8 times, and they're expected to grow. Well, it looks like about 8%. Oh, what happened? Yeah, 24 divided by 4, closer to 6%. Ooh, it actually makes them a little expensive. Divided by 6. Yeah, it puts them close to a 3 peg. Interesting. I'll write that down. At $9.24 of projected EPS by Jan 31. Wall Street consensus sees growth averaging 3%, or sorry, 6% over the next 6 years, or 4 years rather. It's too early for this. Puts the peg ratio around 3. A little pricey, but that's okay. Everybody loves Target. Next, Macy's. Oh, Macy's. Let's see how. We'll cheat. We'll take a peek at the stock. Oh, Macy's down 8%. All right. So no Target over here. Let's see what happened. Okay. All right. So Q2 gross margin beat and adjusted EPS beat. So it must be in their guide. Let's see. Q2 gross margin and adjusted EPS beat. And yeah, that's a good point. Target's dividend. Target. What do they pay? Yeah, they do. They pay a 3% dividend yield. Now that's going to get a little smaller now that they're up 15%. So just take 15% off of that. But so the dividend yield's going to be like 2.6 at this price, right? Div yield around 2.6 to I'll just say 2.6 to 2.8% at 165. All right. Gross margin Q2 and adjusted EPS beat. Fiscal year adjusted EPS guide is, let's see, fiscal year adjusted EPS $2.55. Nope, sorry, versus up to 290. So what's the midpoint? I always take the midpoint on the two numbers. Be 35 divided by 2, 17 and a half. Take 17 and a half, that'd be 60. I got 17, 10. No, about 70. Why can't I do my math today? I'm telling you it's too early. Plus 0.175. There we go. 272.5. 277 was the expectation. Okay, so slight miss on the guide. That's not that terrible though. Reaffirms annual. Yeah, people are calling that reaffirming. That's fine. Okay, but but the sales growth wasn't that great. That's why. Okay, so if I write down Q2 net sales came in at, where was it? Q2, yeah, Q2 comps negative 3.3% versus positive 6.6 expected, 0.6 expected. So almost a 4% miss, 4 percentage point miss. And then for the fiscal year, they are guiding down 1.25%. Fiscal year comps guided down 1.25%. And the estimate was 0.68% growth. Okay, so guide a little oopsie there. Inventory up mid-single digits. Gross margin is roughly in line. Credit card revenues. Okay. Yeah, this is gonna be a growth question. So I'm gonna say more of a growth concern question here. Does anybody still go to Macy's? I remember when I was a kid, my parents would drag me to Macy's. Well, which I was okay with. They still had a little toy section, but yeah, I don't know who still goes to Macy's today. Target, on the other hand, that's a good place. I like Target a lot. Their Nerf gun aisle is usually pretty good. Depends where you are, though. I've been in some states where it's kind of just like, yeah, no inventory. All right. Very interesting. Next, DJ Maxx. So, okay. TJ Maxx. Okie dokie. So let's just get the most important bottom line here. TJ Maxx slightly adding to EPS beginning in 2026. Shares actually gained about 4%. Well, that's good. Net sales came in slight beat. Slight beat on net sales. Raised margin and EPS guide. How much did they? EPS slightly. It's like 4.11 versus 4.055. So about a 1.3% raise on fiscal year EPS. Their comp sales that they're guiding 3%. So they're actually guiding the higher end of the range. Guiding 3% sales comp. Expectation was 2.76%. So this is sort of very micro. Like which company perform better. You got TJX, which is up 4.5%. Target, which is up 16%. Macy's is down 10%. It's a lot of movement there. But it does show the market essentially rewarding where growth is. And this is pretty typical. You would expect the market to do just that. The market didn't do that. That'd be a problem. All right. Let's see here. Looks like there's a... They really backed off the LGBT promotion this year at Target. Yeah, they got a lot of backlash for that. Nerf gun collab. Oh, we got so many Nerf guns. It's crazy. Let's see here. People don't realize how great Ford AI is and Blue Cruise. I wonder what their like software stack is, like whether it's built on top of it. Is it NVIDIA? Let's see. I'm gonna just Google Ford Blue Cruise NVIDIA. And isn't that geofenced as well? Either way, we'll find out. Ford extended its collaboration with Mobileye. Ford uses Mobileye. Okay, that's what Tesla started with, like, way back in the day. Sales at Target in red versus blue states. Oh, interesting. Because of the alphabet backlash. Yeah, they don't break that one down. Huh. All right. So, next. What is next? Let's see what earnings we get later in the day. Later, we got Snowflake, Zoom, Urban Outfitters. Yeah, Snowflake and Zoom will be nice. Snowflake's kind of been stuck. It'd be nice to actually see them move. Snow. Yeah, still at 130. Like, I wonder if they could pull off a Palantir. Look how low they are. It'd be very interesting. See what the expectations are for it. Okay. Let's see here. Implied volatility as well. Okay. Snow's vol. Oh, it's on the lower end for historic vol. What about implied? So going forward, it's expected to move a little below average at 10.4%. Got 32 buy ratings, 11 holds, and 2 sells. And they usually beat EBITDA 8 out of 8 times. It's a little bit more mixed on EPS. Revenue, they usually beat 8 out of 8 times. So, interesting how this one's sort of been left behind. Well, I mean, interesting. 405. You kind of look at it, it's like, how much further do you have to go? All right. Very well. Good. So that's a little bit of a rundown on earnings. And now we should jump into, let's see, 5 minutes to 6, which means we still have about an hour to go before we end up getting that jobs revision data, which, keep in mind, it just revises to the spring, so it doesn't actually capture the summer. But it will give us a little bit of a tell of how misled we've been on some of that jobs data.
And at the same time, Donald Trump will be at the border trying to distinguish himself in terms of policies between what his campaign looks for in a Trump 2.0 versus what the Democrats are vying for.
Looking forward to your coverage with the rest of the Bloomberg team. Anne-Marie on the ground in Chicago at the DNC. All of that still to come, plus our coverage of Jackson Hole, Wyoming and the annual Fed get-together. Bramo heading to the airport in about an hour's time.
Pretty much. I actually think this is actually going to be very important. And I understand we've been a little tongue-in-cheek because they're not going to basically come out and say we're going to cut by 50 basis points. Nonetheless, the key question of understanding the long and variable effects is key, central to this market. And frankly, expectations of rate cuts has been what's been fueling this incredible rally that's left stocks near their all-time highs.
I'll be holding down the thought. And here's the lineup. Matt Hornback of Morgan Stanley, Sam Stovall of CFRA, Aditya Bave of Bank of America, and Mohammed Al-Aaron of Queen's College, Cambridge in the studio. We'll speak to Mohammed for the best part of 90 minutes to work through some of these major issues. It all comes down today, apparently, the fate of this market in the hands of revisions at 10 a.m. Eastern time. Lisa, which happen quite often, but this time, this year, seems to be a much, much bigger deal for a lot more people.
Well, Krishna Mamani is saying that it's somewhat political in terms of gerrymandering and other situations. There is a lack of credibility in some of the data in terms of surveys not being as well responded to. And that, I think, is underpinning some of these revisions.
The Fed talks a lot about data dependence. How dependable is that economic data? 10 a.m. Eastern time, the next stop for this market. The opening bell about 34 minutes away. Equity futures positive 2.
All right. Little birding.
And being leaders in our respective spaces.
Very boring. So, let's see here. Let's see what's moving bigly in the pre-market. Macy's and ammo to the downside. It's actually not a lot to the downside. Target, TJX to the upside. Sunrun, Elf, Lone Depot, Ulta, Honest, Abercrombie. What else? Walmart's taking another %. What was Walmart up yesterday? They were up about 0.83. They were up 1% yesterday, up 0.83 yesterday. Amazon. Ooh, Amazon's back at 180. Look at that. Amazon recovered nicely from that like 155-ish level they were down at. Nice. Good little tick up here in the pre-market as well. Just sort of like slowly sneaking up on you. 180 on Ubiquity. Nvidia's trying to go positive here in the morning. And so Supermicro. All right. How's BTC? Up about 1/3%. All right.
Typically do, though, is threaten proxy fights for board seats. Now, a big exception is Southwest, where Elliott is planning to mount a proxy fight with a proposed slate of 10 candidates, comprised in part of former airline CEOs. If it goes through, this could be Elliott's first proxy fight in 7 years. That was when it took on Arconic, and that situation ultimately ended in a settlement. Other recent Elliott headlines include those from yesterday, where the firm applauded Texas Instruments' capital allocation update, which Elliott said is, quote, well aligned with Elliott's proposed approach. That stock fractionally higher since CNBC reported the stake in May. And just last week, Starbucks, another prominent Elliott campaign, changed CEOs. And here's an interesting stat. It's the 13th CEO that had been replaced in situations where Elliott was an activist in just the last 2 years, Becky.
Wow.
In second place.
Elliott just goes in there and cleans house. Okay, so Ford, this is interesting. There's an article, actually, front page of the Wall Street Journal on Ford. I'll make a quick little note. Ford's Blue Cruise uses a Mobileye. But it looks like now they're canceling plans for their large EV SUV. I wonder if the stock's moving on that. Is they're gonna take a charge on it. Ford's actually up 1.5% on that. How about Tesla? Oh, Tesla's still up about 1/3%. But that's interesting because what else do we have? Let's see if I go here. Automaker said it would delay plans for an electric SUV, for an electric 3-row SUV by 2 years. Oh, okay, so it's canceling. Well, this says cancel. Oh, they said this spring it would get delayed. Okay. So previously delayed to 2027. Now it's just canceled. Citing pricing pressure and aggressive discounting to move their EVs. Yikes. Pressure to decrease prices in EVs. Let's see here. We will pivot and adjust based on where the market is. Okay. Let's see. What is here? This is the Wall Street Journal. A lot of divers trying to find those yacht passengers. See that? Seen that almost every day here the last 3 days. In fairness, I guess now they're sending over robots too. I know some people are like, I don't get when it's billionaires you get the massive search party, and otherwise you don't. I don't know. I don't know if that's true either. All right. What? Elon Musk loaned him money to buy his childhood home. Now the billionaire is foreclosing. Elon Musk helped Jordan Walker Perlman buy the longtime home of his uncle, Willy Wonka, Gene Wilder. Okay. Musk agreed to loan the couple most of the money they would need to buy it. 4 years later, an entity tied to Musk has filed a notice of default on the property. Yikes. You gotta pay your bills, man. Agreed to pay $7 million for the house. Fallen behind on payments on the $6.7 million loan, according to the NOD. Yep. 90 days after filing. 3 months and 21 days. Couple listed the home for $12.95 million. Oh, seems like he's being nice about it. Elon gave us a magical opportunity. I have no complaints. Yeah, looks like a kind of classic sort of Beverly West Hollywood kind of hillside home. Interesting. All right. Gotta pay the bills. All right. What else? What else do we have today? Let's listen to Jimbo. Let's see what he has to say.
Some sign that they're digital, and he's talking about pickup, and their target club is good. I like it because they started buying back stock. I told Brian, if you don't start buying back stock, I don't see the conviction. The conviction is there. I think that this is a remarkable quarter, but here's a little quiz I'm going to give David because he's been a little AWOL. David?
Yes, sir.
Give me a retailer that's twice the size of Target that reported great numbers.
In market cap?
Yeah.
That would be TJX.
Yeah. He's sharper than ever.
I'm on top of it, man.
128
TJX, we always like to
billion
point it
versus-
out. 128 billion versus roughly
Yeah.
66,
And they
almost
did it
exactly
all.
twice the size of Target. And even though
Wow.
we'll spend a lot of time on Target and probably an equal amount of time on Macy's as TJX. I mean,
Macy's $5 billion.
Yeah.
That's kind of crazy.
And again, much more profitable.
Right.
I was making this point earlier. We just had a conversation. I've said it's a much more profitable company.
Well, you
on
go
every
there-
dollar of sales, they are just making more money.
So what can tie all things together? If you look at Macy's, they have to close stores. They didn't close the stores that I wanted to. What happens with that Macy's in Carl? It goes to TJX. We go to Marshall's. We just crush it. Every time you go to Marshall's, you feel like you crush it. You know, every time you go to Macy's, you feel like maybe I got crushed.
Or Home Goods. It's another one you go to feel like you're getting something.
Home
I mean, you
Goods-
also find out what didn't work.
Home
I can
Goods
see why
has
that
the-
didn't work, and I can see why that didn't work.
The
and I can
Home
see why-
Goods candle section is killer.
Really? The signs that say moms love wine?
They've got a booyah candle that
Rosé all day.
They do have that.
Yes.
Yes, they do. Yes, they do.
There's whimsy at Target.
Oh, whimsy.
Whimsy. Well, Brian calls it newness. I mean, you know, Brian's real good, man. I'm so glad he got this right. And he also told me that they hired more people to make it so that there's less pilferage. So that what happens is there's something that you've always wanted that never happened at Walgreens is you press a button or they anticipate that you might want to go in and they've got the key. At Walgreens, it was really important for you to go Amazon online. I have ordered Amazon same day from Walgreens and I got it faster. Okay, goes up Walgreens show. Little Walgreens show.
We're seeing the stocks react. I get it. Target is up a lot, of course. TJX
Should
having
be.
another strong quarter. Macy's down. But what is your takeaway, to the extent there is one, largely speaking, about the consumer at this
The
point?
consumer is so sick of inflation that they will go to anybody who says, you know what, we can slay inflation. And I said to Carl yesterday, we don't need price. We don't need price. We don't need the government to tell us that it's gouging, so therefore they want to put some sort of limit. We just tell them, go to Costco. See, now, I don't think that Vice President Harris is willing to talk at the convention. Like, look, you know, I was at Costco the other day, and it's pretty good. But the government has to start being more serious about the fact that we have a bifurcated consumer and a bifurcated store set. And we have to recognize that some stores are leaders. Walmart is a leader at rolling prices back. Costco has restrained America. The producers, they basically say, look, this is the way it is, or we're going to go against you with Kirkland. And Carl knows, I'm going to quiz him again. Let's see. What's the one brand that they were never able to beat Costco? They've been able to beat every single brand in the world with their Kirkland signature. Which one, Kevin?
Soda.
Ouch. That hurts.
He's a Jeopardy winner.
Okie dokie then. So, let's see here. What else? Third night of the convention yesterday, you had the Obamas. Tonight, you're going to get Tim Walz, Bill Clinton. Tomorrow, you'll get, what's it called? Harris. And that'll be on Thursday. And then you get Powie Wowie on Friday. Let's see. You've got 53 minutes to go till we get that jobs revision. It's widely expected to come in negative substantially. So shouldn't be too much of a surprise. And a lot of that data is already exists. So it's just a matter of slapping it together. Okay. Oh, that's interesting. Barron's has a piece. They call it 15 stocks for the end of the AI trade. Okay. Take a peek at that. BofA global research strategists have been beating the drum. It's time to take a rain check on big artificial intelligence and stick with the all-weather investments. Let's see here. Sticking with the tech behemoths paid off last year thanks to AI. Okay, so now what? But now there are concerns about whether returns from AI can keep pace with the costs that underpin them. Expectations for growth for average AI ETFs is falling. Okay. So what do they like? So they like O'Reilly Auto Parts, Home Construction Start NVR stock, Progressive, Arch Capital, Costco, some of these others. Oh. All right. Let's see what else. Don't know what else. It seems a wee little bit boring. Let's go here.
But what it is they tend to be arbingers of a new cycle. Now, 2004 became profligacy because they kept raising, and then we had the housing crisis, which Toll Brothers would tell you is not occurring. But yeah, I mean, it tends to be something where you do get a hiccup. I think we're going to get a hiccup, but then we just charge ahead. I think that September, I'm not going to go against the prognosticators who say September.
Yeah, JD.com down about 7.7% as Walmart is selling a big stake. I personally mostly stay away from the Chinese companies, so not much of an opinion there.
Later, you're up 20, 25%.
Well, look, I think cycle work is good. Larry Williams, we were doing some cycle work. He's a great market historian. And he said that we're probably going to go down till mid-October. And he says that the key stock, the linchpin, the kingpin, whatever, is NVIDIA. And NVIDIA's next week.
And you've argued to...
I don't want people to do make or break NVIDIA. I mean, NVIDIA is the best performing stock in the S&P. And there's always people who come in right here.
Although ADI last night, the upgrade of Texan today suggests inventories in general.
ADI and Texas, I'm so glad you mentioned, because Texas Instruments and ADI are what we call Internet of Things. They're actually like the stuff that you all see and do. And that cycle's been horrible. If that comes back, that's the last one. And if that comes back, you really are smooth sailing in semis. Now, Texas Instruments showed discipline. For once, they didn't just say, well, actually, they showed flexibility. I shouldn't say that.
They showed flexibility on CapEx.
Right, well, because they spend. They never listen to anybody.
Right, and Elliott, as you might imagine, given their $2.5 billion stake that we told you about a couple of months ago now,
right,
is certainly saying, hey, see? Maybe we did have an impact.
But they should be saying that because Texas Instruments is insular. They take nobody's advice.
Okay. Barron's here suggesting Fed minutes do come out today. Ooh, that's right. Okay, let me see what time those come out. Let's find out. So, it should be 10 a.m. Doesn't say. Fed minutes. I'm pretty sure it's either 10 or 11. Anyway, so we'll get to see the minutes. That'll be today. Oh, there it is, 11 a.m. Okay. Minutes come out for the July FOMC meeting at 11 a.m. PT today. All right. What else? Let's see other catalysts. Catalysts otherwise, unemployment claims tomorrow, S&P manufacturing, existing home sales, new home sales Friday, next week, durable goods, capital goods, NVIDIA reporting obviously, real estate price growth through CoreLogic, mortgage applications, kind of easy caddies coming up. Towards the end of the month, you're going to get PCE on the 30th, GDP price index on the 29th. And then we're already in September. Well, that's wild.
When is the Brazil
We're
game?
trying to convince Jim to go to Sao Paulo.
Oh,
Yeah.
It's like it's almost
It's
the
the
opener.
opening, yeah.
Oh
It's
my
the
God.
opening. Well, you know, we're kings. Wow. My wife hates that. Oh, do you play? What's your number? Number 99? What?
When we come back this morning, we'll get a look at Ford's new EV strategy. They're shaking things up today. Stocks up about 1%. We'll get
Canceling their SUV.
World. AES is changing the world of.
Let's go.
Today. Everywhere but the seat. The seat is leather.
Wow.
We get it. You love your butt.
Every single one of them on commercial again. No problemo. You got Tesla here climbing above that 221 level. Any predictions on the jobs report? It's not really a jobs report. It's just sort of a, like, how should I put it? Revision statistic that takes you back through, I think it's April or May. And then for the year prior to that, just to tell us about, you know, how weak things really were between 23 and 24. It's not super recent data, so I don't know how much of an impact it'll have. I think if it comes in heavier to the downside than expected, I'll write this down. Expectations on Fed, what do we want to call it? Or BLS benchmark revisions. So I think JPM's pretty low, if I remember correctly. JPM mid 100K revision down. Goldman was looking for 600 to 1 mil revision down, so 600K. Mizuho 1.1 mil. So, you know, expectations are for a pretty nice down draw already. It's amazing to see how much volatility, or how much variability there is, I should say. Okay, let's go to Nick T. Let's see if he's got anything for us. Mortgage rates slowed down. Let's see. Mortgage rates ticked down last week. BLS is set to report on Wednesday its preliminary estimate of the upcoming benchmark revisions. Oh, okay, yeah. Let's look at Nick T's explanation. The Labor Department publishes the estimate every month on how many jobs, publishes estimates every month. This is the regular labor report, added in the prior month based on surveys. But more detailed data from state unemployment tax records subsequently becomes available, and the BLS uses these records to revise its estimate of jobs growth. They provide a preliminary estimate. They provide a preliminary estimate in August for the 12-month period ending the previous March, and then issue a final revision 6 months later for the same period. So it only ends in March. So basically March of 23 to March of 24. Nick T estimates 735,000. Yeah, and then basically job growth of 242,000 jobs per month would be closer to the 160, 190 range. Some estimates are even lower. Oh, JP Morgan, I thought they were mid 100s. I guess their midpoint is actually, maybe it was as low as 100s, but I'll update that. So JPM's out 360. Okay. Why are the revisions so large? Payroll surveys make assumptions about how new businesses are created. This is the birth-death model. Some people point to revisions as an example of cooking the books, but it's actually evidence of making sure the numbers are as accurate as possible and adjusting to new data. Is this new information for the Fed? Not really. Doesn't say anything about job creation since March, per se. Right. Well, it would just kind of show you the assumption would be, hey, you know, if growth is substantially smaller, or has been substantially smaller, then it probably is now as well. Right? It'll probably get revised down now, in other words. Yep. What else Nick T got for us? Nothing recent. All right, let's go over here for a moment.
Cost of housing, understanding so many people are trying to fulfill the American dream. I announced my plan to build millions of new homes and help first-time home buyers with a down payment.
All right, now take a look at this op-ed. Kamala Harris tries to forget Joe Biden. Jerry Baker wrote that, and Jerry Baker is with me now. Can Harris successfully run against Biden's record, when she is part of that record?
I mean, I think she has to, Stuart. I think that's part of what they're doing here. You heard her attacking essentially the economic record of the administration of which she's been a part, saying that, you know, prices are too high and somehow blaming that on companies, and that there are housing shortages. And that speech she gave last week paints an incredibly bleak picture of the state of the U.S. economy right now. This from the same team who've told us that the U.S. has been experiencing an economic miracle in the last 4 years. So she has to. We know that Biden's record on the economy is not popular. His approval ratings on the economy are as low.
Right. Let's try something different.
Quickly as they believe they can at this point. There's new vehicles coming out of the Skunk Works operation in California. Those will be the first ones that we see coming in 2027 that they believe will have dramatically lower costs and will open up a number of markets for them. And then finally, Jim, when you take a look at the heat that Jim Farley may be feeling, separate from EVs, it's the whole warranty issue. We have talked about this time and time again. They believe that it's going to be improving, that what you're seeing right now is a reflection of the previous production lineup before 2021. That may be the case, Jim, but in the meantime, you can't have quarters like they had last quarter, where the boogeyman jumps out of the closet and says, here's $1 billion that you're taking a hit on when it comes to warranty costs. You just can't do that. And they've had that time and time again.
Yeah, Phil, that's why my Travel Trust sold it. Couldn't handle the warranty problems because it said quality. And we know that if you don't offer quality, then it doesn't matter what the stock price does. You are spot on. This is the big issue. It's the warranties.
Yeah. And, well, now, look, on the last call, Jim Farley said that they believe they have made the number of changes in their production that to immediately address warranty costs that could pop up down the line. They are holding back on the launch of vehicles, means that the cadence is a little more lumpy. It's not guaranteed that come May 1st, that vehicle is rolling out. If it's not ready, they're holding those vehicles up. Now, the proof is in the pudding, Jim. We'll see if this pans out over the next several quarters, couple of years, if their warranty costs do come down. Because Lord knows that has not changed over the last several years.
Great reporting as always. It's great.
Appreciate it, Phil.
Strong.
Phil LeBeau. We'll get Kramer's Mad Dash countdown to the opening bell in about 9 minutes. Take another look at the pre-market. Back after this.
Yeah, 8 minutes now to go to the bell. I was just sort of looking at this zero hedge piece, which is interesting. It just touches on current market expectations for rate cuts are 2.23%. But there are only 2 times in easing cycles that we had less than 2.23% in cuts. One of those was in 95. That was the soft landing of 95. And then one of them was in 67. I want to see if we had a recession then. I don't know if we did. So let's go with FOMC effective rate. Yeah, Fed funds rate. 67, no. 66, 67, here you go. So here's 66, 67. You had a decline in rates from about 6% down to about 4%. And no recession there at 66. So, but out of these, we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. 11 out of 13 times the Fed ended up cutting a lot more, and their argument here is that traders basically underestimate what the Fed will do. Yeah, I agree. I think the Fed is really interested in priming markets and pumping markets. Pump everything. Keep the economy strong, as long as there's no inflation. Okay. Somebody says, fix the title of the live. What's wrong with the title of the live? Jobs data, stock market, open live, and crypto. Oh, the date. Dang. Okay, I'll fix it on YouTube, but it's not gonna fix on X. There we go. Thank you. All right. So, next. Let's see what else is moving. All right. Let's see here. Yeah, it was like I'm a day late. Yes. Yes, thank you. Thank you for letting me know. Okay, Tesla's at about 0.5%. Which way will it go today? Yesterday it was down, what, 73 bips? Yeah. 59.5 on BTC. Kind of mid-range here. So chilling out. Mid-curving, as they say. Almost down 10% on Macy's. Yikes. Ooh, IWM's up right now. Some enthusiasm there on the smalls. Okay. Will Powell's word salad help markets Friday? I mean, I don't think he's going to be hawkish. So probably. It just depends how concerned he is about a recession. So the market's not expecting a recession.
With the FAA worth up to $2.4 billion. Next up, the Japanese tobacco company that makes Winston and Camel cigarettes announcing today that it will buy the Miami-based discount cigarette maker Vector Group for about $2.4 billion to expand its position in the U.S. market. And finally, an Idaho farmer is trading in his Ford F-250 for a Cybertruck. Braden Smith is using the EV to care for his family-owned 2,000-acre potato farm. The farmer and content creator has gone viral for the switch, saying that he saves a lot on fuel. He tells USA Today that when he drives his Tesla Cybertruck around the farm, he either gets a middle finger or a thumbs up. And you can follow all the latest company buzz on TREN Go on your Bloomberg terminal.
All right, let's get a check on futures right now. Just about 4 minutes to go until the cash trade starts. S&P futures and NASDAQ 100 both up about 0.2%. The small caps are leading the way, up about 0.2%. We'll talk with Stephen Whiting, Citi's Global Wealth Chief Investment Strategist and Chief Economist next, because it's not only the stock market we care about, we're also watching very closely these jobs revisions coming out at 10 o'clock. This is Bloomberg.
Yeah, all right. So yield curve right now sits at negative about 17. And we've got 1.34 cuts priced in for September. So we shall see. I think NIO will eventually come to the United States. I mean, I think it would be great for consumers to get Chinese cars in the United States, but there's so much anti-China in policies and, you know, the tariff land that probably won't see Chinese cars in the United States for a while. But yeah, you know, a lot of people think it would dramatically reduce the price of cars. I agree with that. You know, Chinese competition, plummet the price of cars. Tesla ticking up there. After the Cybertruck story. Look at that. Trying to rally a little bit going into the open there. Oh, yeah. Oh, no. All right. What do we got? How many minutes we got? Oh, only 90 seconds. 90 seconds to go.
Premium multiple requires more than execution and muted spending backdrop. This is a piece about the American consumer, except for I would tell you, I think it's an ill-advised piece. American Express, yes, Steve Squeri continues to deliver and deliver and deliver, and people doubt him at every turn. Not just because he's a Jet fan, which I know is very difficult for you to fathom, but there is without a doubt a sense that it's always going to be the last good quarter for American Express. The company defies it because the company's so well run. So once again...
Yeah, American Express keeps killing it. It is pretty impressive.
And that presumes that management doesn't do anything. You think management...
Yeah, which is crazy. Everyone knows everything is made in China. Yeah, no kidding. Except you don't see with cars.
Toll Brothers did, which you know my model with Toll Brothers, David, is we talked about is rich people are so rich. So I'm just saying that the consumer is not the issue. It's do you know how to manage the consumer? And we just, as a broad rubric, look at companies and don't think, well, that's Steve Squeri. And Steve Squeri knows me. That's
They seem to be questioning the multiple here at Bank of America. That's one reason why. It requires more than execution, they say. So, I mean, at least to defend them, not that I care to defend them, they're saying they can execute, but the multiple's too high.
Well, not given the consistency of Steve Squeri. And I think, once again, I return to the idea that Brian Cornell knows what to do. Steve Squeri knows what to do. The people who run Costco know what to do. And then there's people who don't have a clue. And those are the tougher ones to deal with. And by the way, one that knows what to do, but does never get any credit is the TJX manager. I know we're going to speak about TJX, right? What is that, David? The Chelsea Club?
Yes, at the big board it is, the women's team at Chelsea Football Club. And over at the NASDAQ, it's Black Visionaries, a nonprofit focused on resources and services for black professionals, as breadth is relatively impressive here at the Open.
Yes, and I know that yesterday we took a little bit of a breather. I actually wanted that. The numbers that you were talking about the how many days up, I don't want to be complacent, and I also know that you don't want to run into some sort of NVIDIA buzzsaw next week. But I do see these companies where, say, Ernie Herman comes in. He's opened 5,001 stores, and no one even knows who Ernie Herman is. But Ernie Herman is the person who runs TJX. And he's not about Ernie Herman. He's about the stores and having the right selection. We have some really great merchants in this country.
All right. Let's see what we have here. What do we have here? We have... the meats. No, we have Tesla. Wow, that's a weird little movement there on Tesla, eh? Look at that. But, you know, the first few minutes of the market are always weird. Now I'm out of coffee. That's also kind of sad. I guess I had another little tiny sip. That bottom of the Pokeball cup. But, all right, what do we got? Tesla down about, what is this, 40, well, it's up about 30 basis points right now, but it's falling. We've got the Qs. Qs are falling. Snowflake falling a little bit. Bitcoin falling a little bit. Okay. TJT. Dropping a little bit at the open there as well. It was, I mean, it's still up 15%, which is pretty nice. TJ Maxx holding on to 5. Macy's down 11. You've got, yeah, Bitcoin just turned negative. Apple turned negative. Microsoft turned negative. Spice holding. Lowe's, Rivian, Pill. A lot of green over here. Disney. Enphase. Ulta up another 2%. There's Nvidia. Nvidia just turned green.
Gained the lead.
And there's Tesla. Look at that, sort of bobbing around that 221 line. And what else here? Oh, what's it gonna do? Yeah, it looks like the Qs are trying to recover there. Okay, cool. So now we're waiting for those benchmark revisions. So we've got, what's it called? Trying to figure this out. Oh, there it is. 27 minutes. All right, let's listen over here.
Older people may not take the drug as often, in part because you lose a lot.
Oh, red candles on Qs again. Tesla's about to go negative. Okay, Tesla just went negative.
Lost
the
lead.
Yeah, look at that. Just like out of nowhere. Oh, it's coming back. Bobbing around like crazy. Oh, look at the Qs. Qs are about to lose the lead. Jeez. All over the place right now. Do you like Enphase in a recession or soft landing? Do you have a price target for Enphase? Yeah, the challenge is, like, I think household wealth is present, and obviously lower rates are going to benefit solar substantially. So, question is, how rapidly can you lower rates? So, yeah, I mean, I think there's a point where Enphase gets really desirable. Let's say we start pricing in a recession around the election. Then there's probably some more exposing time. I mean, I've got some exposure to Enphase now. I think it's a fantastic company. It's high margin. It's a great quality product. Yeah, everything about it I really enjoy. But yeah, I used to say that in sort of this post-COVID recession that wealthier people would be fine or whatever, like they'd still be able to buy Teslas or solar panels or whatever. But now you have this white collar recession problem, where the problem is it's the white collar people that are losing their jobs that would ordinarily be buying the Teslas and the Enphase solar systems. So, if you have a white collar recession, that's very different from sort of a normal blue collar recession, and it changes outlook and expectations. So we'll see. All right, what we got here?
They say positions them well in terms of the underlying stream of concurrent secular trends.
The question was, Texas Instruments part of the problem. They kept putting up foundries, and therefore they keep putting up more inventory, and now they kind of hold back. We get a little Elliott religion. We get lots of excess inventories, and then suddenly, as Chris Danley says from Citi, earnings per share doubled.
Their line was, it's Christmas in August.
Wasn't that
was
great?
The line about Texan from
It's
Citi.
funny because we have Macy's going today, and we have, remember Gimbals? My dad sold Gabardines at Gimbals before he was fired. It was very ignominiously fired.
And Macy's and Lord & Taylor.
This is nonsense they're talking about. Bitcoin's down a little bit, 59.2. Q's holding on to 15.
And yet suddenly you can see in July, August, a massive move in the yen, for example. The foreign exchange market just suddenly caught up with the idea that there was going to be monetary policy convergence. So we should be looking for other things. Let me just give you one. The housing market in the United States, home resales are down about 30% from where we were before COVID. Right? So there can actually be a significant impact. There has been a transmission of monetary policy, right? There's a really bad housing market.
But it's going to take a long time, right? I mean, if they cut rates, it's going to make it easier for home buyers to get back into that market, obviously with a lower mortgage, but it's going to take time, right? These retailers that we're worried about, even the ones who do well, like Target, are saying that the consumers are much more discerning. It's going to take time for these lower rates to get to their wallets so they can spend more money, going to Disney parks.
Look, I'm sorry there hasn't been any synchronized collapse in the economy where we can have a wild rebound and everything all at once. That's actually good news. What we've done is we've hidden impacts of recession beneath the surface in an asynchronous economy. Why? Look, the pandemic had a record large decline in services employment. This is not even a cyclical part. It's the biggest part of employment, but it's not something that usually declines in recessions. You know, when you have multi-million recoveries during the exact time where you're feeling the impact of a housing downturn, you kind of hit it all. And, you know, we are in a position now where we're probably not going to get a collapse in aggregate unemployment. We are getting a real slowdown. That's what some of the data will tell us at 10 o'clock. It might be a crawl. But lots of things don't have to happen again. There won't be a new trade downturn. There won't be a new manufacturing and housing downturn. Now, there are some policy concerns, but let's say that's not really going to come from the business cycle.
Let's just double down on the consumers. The housing market is a great example about where you're seeing that pain. You're not seeing it in the big retailers, partially because of that trade down issue. When does the stimulus, when do the excess savings, when do the cash on the sidelines stop mattering because the consumers are feeling too much of a pinch? And you start to see that maybe in Target.
I don't think that the growth rate of retail spending is going to suddenly go.
Tesla just bounced a bit. It's up about 60 basis points now.
Is going to stay here. We're probably going to muddle along, and the business sector has prepared for a downturn that hasn't happened. Right? So that's why last year we had a decline in imports of 13%. Particularly ahead of the U.S. election, I think we're going to pull in all the imports that we possibly can. Manufacturing production was restrained all through this. Take a look at the ISM readings. We're concerned about a recession, and there simply hasn't been one. Well, we'll probably marginally help consumers and will certainly help housing turnover when we've had such incredibly low levels. So housing-related durables will pick up marginally. It's really the finance, the economics of mortgages and housing that's going to improve on a lower base rate.
And I do like the idea of the, it sounds like you're describing basically a rolling recession.
Exactly.
Yeah, and I mean, I don't envy the Fed for having to make policy around that because it sounds difficult. But like you said, worst kept secret in the world that 5.5% probably isn't appropriate, probably is going to come down. What's the neutral rate? Just to throw you a softball.
Well, you know, that's a softball question. Yeah, so look, I think it's going to depend immigration. We've seen remarkable growth in the labor force from the post-pandemic recovery in immigration. Some of that is unsustainably strong. What is immigration policy? For high-skilled and low-skilled workers, what's the speed limit? It's going to be a little bit difficult to tell. The inflation rate has come down very benignly because a big part of this was really the upheaval of the pandemic, not just a stimulus, right? So I think that, you know, we can probably achieve 2 to 2.5% PC inflation. We'll call it 2.5% CPI here. You know, at interest rates, nominal policy rates around 3.5%.
Stephen Whiting, sticking with us from Citigroup. But we want to bring you some breaking news before we head to break as well. We're taking a look here at Franklin Resources, really dropping here on the day. They said that their Western Asset Management division is having Ken Leach taking immediate leave of absence here to focus on a Securities and Exchange Commission probe. The company said it launched an internal investigation into certain past trade allocations involving Treasury derivatives in select Western Asset Management accounts. We'll keep an eye on it for you. Stick with us. This is Bloomberg.
Ooh. All right. So what else? Let's see. We got 19 minutes to go. 19 minutes until data. 19 minutes to go. Oh, Tesla's only up about a quarter now. Ford's actually up 2% on killing the EV there. It's like getting out of the EV gain is rewarding them, and Bitcoin's falling. Macy's down about 12%, Apple flat. I wonder if you have like insiders in the Bureau of Labor Statistics who just trade Bitcoin to, because they know what's coming.
Mark Zuckerberg would tell you that, and NVIDIA, Jensen Huang, the CEO, would tell you that these are the guys who understand us. They really understand what we're up to. And I remember Jensen telling me he would not back Mark if he was combative with trying to create combat. And he liked the pivot that
back to the advertising, though, on the streaming services. You are a captive audience there in a way that when you're just on the old cable. It's one reason to keep cable. You can just flip away. But when you're on Amazon watching a football game, what you need to go through to get out of Amazon while they're in break,
exit.
forget
Did
it.
you see what YouTube has now? You can play the 4 games that you want. They also are starting to have the kind of thing that I've always felt you need, which is how your fantasy team's doing. Put your fantasy up. They've just made a major breakthrough. I've been very critical of YouTube because they have not talked about the things that they're doing. They ought to just do a little more selling, for heaven's sake. I have never seen it come. I said, I beg you guys to give me something positive I can say about you. No.
By the way, guys, I have good
nothing.
news. Just judging from my Twitter, my X feed, there are at least more than 4 people watching because any number of people have already said I'm watching.
But people feel bad for
and
you.
my dog is watching.
My dog is watching.
We're in the UK and we're watching. So thank you all.
Yeah.
And don't cut the cord.
Tell your
Then you're
dog it's
stuck.
new and improved.
When you want to watch the ads, you got to actually watch them all.
He's written us off. He's written us off. And you know what? He's a hologram. He's not even here.
I've been written us off. It's a very tough business. Back to try and answer your question on Warner Brothers Discovery. It's just a brutal business right now when you have legacy old linear cable networks. And Paramount is dealing with the same thing. It's why they had these huge write-offs. It's why they're selling the company. What do you do if you're Zaslav? Maybe you don't go and spend all that money at the Olympics on special events.
How about a porterhouse? Spend it at a porterhouse?
Porterhouse.
The restaurant that
Why
David
would I
Zaslav
spend it?
likes.
Oh.
That's he likes. He likes.
Oh, he likes to go
It's a
there.
really good table, porterhouse.
Okay, kind of boring. Let's go jump over. See what we got over
Financial
here.
assistant to help you spend.
Nothing. Okay, rip. All right. All right, what do we have here? We have a little bit of a bounce there on Bitcoin. Green on Tesla. And the Q's up.
Bye.
Macy's still down a chunk. 12.5% now. But the one that's really interesting is Target.
To the moon. Big PP buying spree.
Okay. Meta spies up 22 bips. Let's see if there's anything moving mega largely here. Target. Oh, wow. DJT's up. About 9%. Maybe on him flipping the poly markets odds there. 15 minutes to data. 15 minutes. Need some suspenseful music. Is that suspenseful? I think we can do better than that. Yeah, let's try this. Yeah, that's better. Alright, what about the downside? Macy's, 13% now. Wow. Alright, what else we got? All right, let's see here. TJT. Oh, let's see how Palantir's doing. Yeah, Target, we covered their earnings. Pretty good. Palantir's pretty stable right now. Ooh, Tesla's up at 1% now. Look at that. A little bit of a rocket ship there. A little rocket moving up. 13 minutes to data. And let's see, what else do we have? Let's see. Ford up on reshuffling plans. Saw that. Okay. Yeah, not really much in the way of the news side, honestly. Let's go back here.
Yeah.
Look at that, will you?
And I mean,
remember when Exxon was the largest
Pioneer
company?
deal was all stock, right? So yeah. So you did issue a lot.
Sheffield
there,
had the greatest company. He always wants to do what was great for shareholders. We didn't
Meantime,
even talk about big natural gas pipeline.
We haven't talked yet. The Journal piece today, nat gas down 30% from the June peak.
Incredible, because a lot of it is that there's not enough pipe to use all the nat gas. It's important. RBN came out with that story this morning. Really, really good.
All feeds into the Fed's calculus, of course, as we get closer to the Powell speech on Friday. Check bonds today. You did have the 2-year back with the 3 handle once again. We do have a 20-year auction at 1, and the big event of the day may be the minutes coming at 2 p.m. Eastern time. Stay with us.
All right. Yeah, so expectations here, they're a little all over the place, minus 600K plus or minus for the benchmark revision, but some folks are wondering, will the data basically say that the jobs market already started weakening between March of 23 and March of this year? That's because this revision set will give us some insight into, really data on how accurate has it been, what's going on with jobs. Is it worse than we thought, better than we thought? Who knows? So Tesla up 1% right now. Bitcoin trying to bounce a bit. And Palantir just went slightly red. Okay. I think yields are up a teeny bit. Let's see here. Bond yields, oh no, they're down a fraction of a percent. Gold still up at 25.43, though it's down a little bit. Okay. Then we just need to wait for the Bureau of Labor Statistics. The Bureau of Boring. So revision is due out now in 9 minutes and 30 seconds. Okay, let's try the doomers. Okay. Let's see. Oh, where did I put it? Oh, there it is. Do the doom and gloomers.
Not touch for us. I mean, I think that it's really hard to find something that we really hate. I would just say to be really selective among small and mid-cap companies. We want to be careful that this is not Russell 2000, that this isn't been buying submerging companies that were once large caps with a lot of debt. It's buying true growth companies without a lot of leverage. So you can do this by focusing on the growth indices within profitable companies, the S&P indices for small caps.
So that rotation that we saw last month, I mean, if you look at the Russell 2000...
Tesla and Palantir running a bit.
The climb and then the drop, right?
Look, I think that there's, a good deal of false hope in some of these things. This is not a new economic recovery cycle. We are not about to have companies that were on the verge of bankruptcy survive and then their equities double 100%. That's the typical pattern, again, for highly leveraged companies. I mean, one of the things that we said that's not obvious about an easing cycle now is that a lot of leveraged companies are in a good place. Their credit spreads are tight. They don't have a lot of debt to refinance, particularly in 2025. Easing has a marginal benefit for them. But if we take a look at the divergence between growth companies that aren't worth $3 trillion and the rest, there's an unusually large valuation divergence. And many of these companies are going to be a part of the future. The economy is becoming...
So it's value growth, basically.
Yes. Growth at a reasonable price can be found outside of mega cap. Mega cap, I think we can look at them one by one. Our fear for them has been, and again, we've closed and underweight, our fear has been that many of these companies will compete with each other in ways that they haven't before. You could just take a look at the Mag 7. Their business models had completely different areas of demand. I'm not sure that's the way it'll be in the future.
At the top of the hour, in just about 8 minutes from now, we're going to get those payrolls revisions that we've been talking about. Could really change the story a little bit on the day, certainly the week. At the same time, something we've been talking about is positioning in bond markets, just how far traders have gone here, amassing historic levels of risk. Have they gone way too far? Can we see some real pain out there?
Look, I believe that the longer-term Treasury yield belongs in the neighborhood of 4%. And yet, if you take a look across the pond in Europe, you can see, similar credits compared to, U.S. sovereign bonds, trading at unusually steeper yield discounts to the United States. The yield opportunity in Europe is 3, the yield opportunity here is 4 for government bonds. And so, okay, I don't think that we've gone to the point where it's terribly troubling, but the bond market did its job here in early August. We had, a solid rally that offset declines in the S&P 500. We got to a richer level, and particularly for the volatile long end of the bond market, we are no longer cheap. We thought we were going into this. I don't think that's the case anymore. Are we really going to get crushed? If you take a look at mortgage rates, we're at twice the spread in mortgage rates over U.S. Treasuries that we've seen historically. We had 8 consecutive quarters of tightening lending standards by banks. If you take a look at structured securities, you're dealing with yields that are so substantially above, for investment grade, sometimes government guaranteed securities, above Treasuries.
All right, Stephen, got to leave it there. Great to spend a nice chunk of time with you this morning. Our thanks, of course, to Citi's Stephen Whiting. This is Bloomberg.
Oh, there we go. Some good old bond market talk there. Yeah, inverted yield curve would certainly be signaling a recession, but ironically, the rate cut futures market is not signaling a recession. So it's sort of like, okay, well, which part of the bond market do you pay attention to? I don't know. Palantir's up about 1/3%. You've got, what do we have here? Space Mobile goes green. Tesla bounces off the 221 line. Bitcoin bouncing. Q's bouncing. Seems pretty bullish here. Target resetting down just a wee bit. AMD's not really moving. Microsoft down a little bit. Apple up a little bit. Meta's moving. Oh, look at that Meta move. Meta. Where are you going? All right, 5 minutes for data. Well, I don't have a line as to where it's going, so it's clearly going to the moon then. There's no ceiling. Or not. Okay, what else here? Disney's flat. Gave up some of its pre-market gains and phased right back to 119. Nvidia's up about 0.5% now. ARM's stuck at 130. Starbucks 92. All right. Redfin's $9. Seems like they ticked up a little bit, huh? Yeah, oh yeah, they did. It's just the day chart here. Oh, on the 19th. That's interesting. They're up 17% on one of these days. Holy smokes. That was just 2 days ago. That was on Monday? What? That's crazy. Wonder why. Oh, no. They were up 8%. Oh, okay. But then they were up a good chunk again over here. Interesting. Yeah, look at that. From 743 to like 934. 934, 1743. 743. Up about 25%. Wow. I like how somebody with a name Fud Farm says being in cash sucks right now. Well, then don't be in cash. Like, do what you want to do. So they had earnings on August 6th. So just heavily traded options. Wow, that's really interesting. So, can you help me understand the numbers we're waiting for? Well, we've said it a few times, but I guess a quick update would be, or a quick synopsis would be, from March of 23 to March of 24, we were told we gained over, 2.9 million jobs or whatever it is. And Now we're going to revise that likely down. The expectations are it's going to get revised down by 300,000 to as much as 1 million jobs. And the more it gets revised down, the more we look and go, wow, the labor market was weakening a lot more than we previously thought. Already, as of last year, what if it's even worse now? So that's kind of what you're looking at. So we're gonna go. We'll pull up the Qs. Ooh, Micron's falling a little bit. And Tesla's up 84 bips there. So Q's trying to move up. Okay, I'm gonna grab my cup of coffee really quick, and then we should be ready to go. So here I'll put the awaiting series info song on. All right. How about buckle up, boys? This is I got this. Oh yeah, that audio is too low. Here's another one. Here we go. All right. Good luck, everyone. Data should be out any moment, starting right about now. Well, don't see it just yet. We'll jump on over to CNBCs as well. I see the Qs popping a little bit, but I don't see the numbers yet. We are waiting. Yeah, they're even on commercial. Okay. BLS just hasn't posted them yet. Okay. And the only place you're going to get them is BLS. So let's listen in here.
Seema Modi here at Post 9 of the New York Stock Exchange. Sarah Eisen has the morning off. Pretty important day when you consider the comments about the consumer out of Target. Fed minutes this afternoon, 2-year below 4, and some benchmark revisions to payrolls coming up in just a few minutes.
Few minutes.
We are 30 minutes into trading right now, and here are 3 movers we are watching. Toll Brothers beating on the top and bottom line thanks to record quarterly home sales. The home builder also raised its outlook for the full year. Stock is up 5.5%. Macy's under pressure, blowing past profit.
Okay, well, it was due right now, so it's a minute late. I keep refreshing the BLS webpage. I don't see anything. I just talk about Santa Clara, California. Largest county, first quarter year-over-year wage gains at 14%. Okay, I want to see the revisions.
The results on Squawk Box earlier this morning. Take a listen.
We said Q2 at the time would get back to growth, and that would be driven by traffic. Traffic up 3% was a really important marker for us. But overall comps plus 2%. Stores were positive.
Somebody says they're still revising. That's brilliant.
Home. Those were up over 14%. And from a overall performance standpoint, for op income rate to get back to 6%, people have been waiting for that for a while.
6.4% actually.
And to see EPS up over 40%, I feel really good about the progress we're making in the quarter.
Our Sarah Eisen spoke with Target's CFO about the current environment. On the consumer, he said, quote, the consumer is resilient in the face of significant inflation pressure and expanding costs. They're seeking out value. And on prices, quote, we're pleased to see normalization in inflation. That's what's helping strength return to discretionary categories. Here with his take on the results, Oliver Chen, TD Cowen senior retail analyst. Oliver has a hold rating on Target, price target of 165. Oliver, good morning. What stood out to you in Target's results?
Dima, great to be here. So what's great about Target is it was traffic driven. That's very helpful. Also, apparel was up 3%. So we are encouraged. It was definitely better than feared. We're hopeful that this means the consumer's on a good track. But the consumer remains very volatile, choiceful. The consumer is willing and able to spend. However, value remains a key focus, and consumers are still very...
Tesla just went negative for some reason. I don't know what happened there.
You had, on the one hand, Macy comping negative and Target comping positive. Target had easier compares, and the valuation was much more modest at 17 times versus Walmart 28 times. So what we need to see from Target going forward is continued consistency. This is the first time they comp positive in a while.
I just tweeted, everyone waiting for BLS jobs benchmark revisions, which are late. They must still be in the kitchen cooking. I mean, revising. So stupid. Yes, follow me at real Meet Kevin on X and Meet Kevin on Instagram. Come on, where are the numbers? This is crazy.
Target have been fairly volatile.
You're not a believer yet then, Oliver, right? You seem to want more proof that there's a real turn here in terms of consistency.
Yeah, I'm looking forward to it in terms of what can happen there, David. They're also building a better and better marketplace, digital advertising. Our top idea is Walmart, in part because the technology opportunity, the value in food and the marketplace. But what we want to see is more quarters of this performance at Target and apparel resonating. Also, home getting better. It's great proof points today.
Yeah, I mean, you did mention the disparity in multiples. Walmart does trade at a higher multiple for a reason, obviously.
What the hell?
I pointed out earlier, it's eclipsed now a $600 billion market value, that company. Why, though, prefer Walmart, given the performance of the stock already this year, up some 43% over that at Target, which basically all its gains for the year are today?
Yeah, David, as we look at Walmart, we really see the fruits of artificial intelligence playing a role, particularly as you search for items, also with inventory management and computer vision. At the same time, Walmart has an industry-leading food and grocery business, which is very stable. So you get defense and you get the offense of a tech company, which are both very attractive. Also, Walmart has Walmart Plus. That's been very competitive as a membership program.
Oh, there we go. It just posted. It did it? Wait, hold on. For release, 10 a.m. Eastern. Trying to see what it is. From March, employment increased. Blah, blah, blah. National employment increased. Okay, so where's the actual, revision number? Why do they make this so freaking hard? Boopy doopy. Yeah. What? This doesn't tell me the revision. Where's the revision? Employment increase in a bunch of counties. That's fine. But where's the actual amount revision? I don't know if this is the full tables. These are just in the largest counties. I don't know. The CNBC still isn't covering it.
Results, really. And it's a tough competitive environment in apparel.
Yeah, clearly is stock down 13%. Oliver, thanks for walking us through the retail trade. That's Oliver Chen of TD.
My pleasure.
Let's turn to the broader markets today. Stocks did snap their 8-day win streak. The S&P and NASDAQ now firmly on pace for a positive August. What comes ahead, of course, a host of fresh...
I still see sources that are like, we're still waiting for the data.
Dave Rosenberg joins us this morning, Rosenberg Research President, to discuss. David, so many moving pieces about...
Bitcoin just popped out of nowhere. It actually popped 2 minutes before the data started coming out. And Tesla went negative right before the data came out. Supposedly. I mean, I still don't really see where the data is. I don't know why this is so complicated and why nobody's talking about it.
Stated by, only 676,000.
Yeah, I don't see any relevant data yet to what we're waiting for.
You know, whether it's retail sales or it's non-farm payrolls or even GDP, the revisions are actually what's really head-spinning. Which is what really caught my eye at the beginning of the year, which was when the Fed, and led by Powell, was saying that they were starting to pay more attention to what business contacts are telling them, highlighting the beige book and survey data and the like, which don't tend to be revised so substantially.
There was an interesting tweet out of Bill Gross yesterday in which he posited that what he thinks is going on is you have wealthy boomers and upper middle class folks transferring assets to millennials and Gen X, and that's what's sort of driving this retail sales growth. Do you think that's happening? He says it could continue as long as capital markets stay healthy.
Well, look, you know, we get carried away always by the latest data point, and the retail sales number in nominal terms was up 1% for July. But, you know, when you look at retail sales volumes on a year-over-year basis, so you smooth out the monthly wiggles, it's actually fractionally negative year on year. And I think if that, you know, theory was valid, then, you know, you'd be seeing a lot more demand for first-time buying in the housing market. The first-time buyer has been AWOL, as, of course, they've been crowded out by the super stretched affordability. So you're not seeing, if people are giving their kids or their grandkids money, it's not being put to work in the real estate market. And it certainly isn't being put to work in the auto market, because auto buying by people between the ages of 16 to 24 is...
This is dumb. Let's try over here.
What does that mean for the S&P 500? What does that mean for the carry trade?
Look, it's not necessarily a bad thing for risk. We've seen this all year. We've taken out rate cuts all year, and equities have done just fine. The carry trade did just fine. The biggest concern for the risk trade, be it equities or carry, is recession. That's what we saw 2 weeks ago. We had the combination of concerns over monetization of AI. We had concerns over the yen, which is the funder for the carry trade. And then we had that payrolls number. And that recession fear was what caused that huge volatility we saw. As jobless claims came out and then retail sales, what happened? Risk came back. We took rate cuts off the table there. We had a lot more in than we even have now. And risk rallied. As long as the Fed don't have to panic cut because growth is slowing aggressively, we can take out rate cuts and risk can hold in fine. That's been the pattern we've had all this year.
Lee, really quickly here, we have less than a minute left, but we've heard a lot of people come out and be vocal about the need for 50 basis point when it comes to September. I mean, Veronica Clark from Citi was on surveillance earlier this morning talking about how the bar is low. Kathy Jones over at Schwab has made the same case, basically that it's not easing, but they need to get out of such restrictive territory. It sounds like that's not an argument that you put a lot of water in.
No, because rates are above neutral, for sure. But if we talk about policy being restrictive, let's talk about the balance sheet at 27% of GDP. Let's talk about fiscal policy with a 6% deficit. Policy overall is not that restrictive. Growth year on year at 3.1% above trend tells us that. There's no need for 50 basis point cuts at this stage. It may be in the future, there will be. There isn't right now, and I think that's the message we'll get from Powell on Friday.
Thank you to Lee Farage of State Street. Of course, a lot ahead. Now, coming up, we're going to talk about the Obamas firing up Democrats at the Democratic National Convention, but warn of a tough...
Somebody jokes that because people are complaining that the data is not out, the revision number, and Somebody replies, super users got it. So everybody can insider trade on it. Oh, is it out? Did CNBC just talk about 676? Let's see. I still don't see it.
NASDAQ up 94 points. As we head to break, here's our roadmap for the rest of the hour. Energy sitting out of the rally. Is there more pain to come? We will discuss this hour.
Plus, shares of Netflix are right near all-time highs, down a fractional amount today. We're going to have more on that move and what's next for the company with an analyst.
And LVMH chief Bernard Arnault, his family office, out with a new big bet. What AI has to do with it, as Squawk on the Street continues on this Wednesday.
All right. Well, no, the only I see folks here that keep linking this this county by county data release, but I don't see it, and then people are putting random numbers in the chat, but I'm just not seeing anything I can corroborate anywhere. So, who are super users? People who email the BLS a lot. I don't know. I don't see it anywhere. This is kind of weird. What you're looking for is the revision number. And, at 7:06, I got a note. People are still waiting. At, what is this? Yeah, 7:04, people are still waiting. Nobody knows. This is weird. Where's the data? Don't you have Powell on speed dial? Right. They're waiting for Nancy Pelosi to complete her trades. Oh, did you see I got my insider trading guidebook? It just came in. This is going to be a page turner. I can't wait. I can't wait to go through this. Look at this. Look at this. That's money, baby. Oh, I'm going to be the best trader in the world after reading this. Oh, it's going to be great. Okay, I don't know what the hell's going on, but just saw a giant red candle on the Qs. Dude, I still don't have this freaking data. It's so late. This is crazy. What's going on? It's freaking tanking. Bro. They're talking about Obama's.
Immigration and the fact that one of the most conservative members of Congress.
Oh. Now David is spamming it. Okay. How did David get it? David. David, who are you? And where do you have this? Oh, interesting. Nobody else is talking about it. All right. BLS.gov, web, EMP. This better not be phishing, you know. My mommy told me not to click on other people's links. BLS.gov /web/EMPSIT/CES PR. Is that an L or an I? BMK. HTML. No, I can't open that crap. This is crazy talk. Nobody has eyes. David's a super user. Don't do it, Kevin. Boo, David. China has the data. Super user here. Economic releases. All right. Well, I mean, they're not. News ain't talking about it.
North Carolina, and only did so once in 2008. Before that, it never went blue, not since 1976. So the fact that this is toss-up and Trump is there, he is trying to shore up his path to the for 270 in the Electoral College. That's really a must-win for the Republicans, and now it's looking competitive for the Democrats. So Trump will be there today. He's talking about national security, and tomorrow he's going to be in Arizona on a border tour. So in both of these events.
Yeah, okay, Max.
The stock up nearly 3%. Positive response.
And nobody's
from Elliott.
talking about it.
Yep. They're happy that they seemingly, or at least their argument is getting some traction.
With all the interest Elliott is taking on, nothing with Intel.
No,
which is going through its own
that may tell you
set of
something, Stephen.
challenges.
You know, sometimes a company has such deep-seated issues that there's nothing an activist could conceivably get them to do that's going to really change the trajectory.
That's the question.
Minus 306? That's lower than expected. If that's the case. Last modified. No, that's last year's. That says last modified August 23, 2023. That's last year's revision. Yeah, no, this is last year's revision somebody linked to me. No, y'all send me stuff that just ain't right. What the hell? Bureau of this is like the lamest data release ever because there's no data. This is stupid. All right. Well, I guess that was fun. Hey, have I mentioned you could get life insurance in as little as 5 minutes? All you have to do is go to metkevin.com/life. It's a paid promotion of the channel. And you can get life insurance in as little as 5 minutes. Apple Pay and Android Pay for it. See? Look how happy everybody is.
Pricing power. The Nike buying spree. To the moon. Coupon code expiring soon. Coupon linked below. Big W. Buy. Nice PP.
Okay. All right. Yeah, CNBC ain't talking about anything. And no notes there, nothing on BLS. Well, it's been like 19 minutes of clicking around waiting for it, and it just is nowhere. And the market's been sort of like going up and down, sort of freaking out on nothing. We don't have any answers. No answers. We got scammed. BLS. More like BS statistics. Someone here is spamming jobs data postponed. Where do you see that note? Yeah, it's supposed to be today, August 21st, 10 a.m. BLS releases preliminary annual payrolls benchmark revision. And oh well. What the hell? Somebody said y'all saying some nonsense. Somebody saying 10:30. Let's see what the BLS.gov has to say. People are spamming them on X. Release the revisions, damn it. We are waiting. Cooking them numbers, I see. Where are the non-farm pay? Oh, man. All right, what's this?
about crypto, and the crypto community has been pretty aligned with former President Trump. There's a lot of space here, but it won't come until after Labor Day. I think we're looking at that first presidential debate between Harris.
Somebody says investing.com says data postponed to 10:30. Really?
We'll start to see more detail, but there's not a lot of upside again for a candidate to show their hand.
Tina, we thank you so very much. That is Tina Fordham, founder and geopolitical strategist of Fordham Global Insight. Now, we are going to keep eyes here on the 2-year yield because, of course, it's been strangely volatile this morning. If you take a look at it, we have been on the path lower earlier in the day. Then we were spiking higher on the yield around the 10 a.m. hour. We are back lower on the day as well, but only by about 2 basis points. We are also going to now bring in Bloomberg Michael McKee back with us from Jackson Hole because, of course, a lot of it was contingent on the payrolls data that we had been seeing. You know, what are the expectations here? We want to say that the BLS is reporting now, very late, that the quarterly census of employment and wages data rose 1.3% in the year through March of 2024, according to the Bureau of Labor Statistics. What are you seeing, Mike?
That's all I see at this point. They haven't updated the website for the Bureau of Labor Statistics, and we don't know why. Usually this number comes out within a minute or two of 10 o'clock Eastern, and it didn't so far. We're keeping a close eye on it. But if it is indeed an increase in jobs, that is going to be a big surprise for an awful lot of economists and politicians, because the expectation was we could lose 600,000, and the real pessimists were saying 1 million. Every year, the BLS benchmarks their jobs reports that they put out every month to payroll taxes that the companies pay for workers, and it gives a better, more accurate estimate of how many people were on payrolls, except for the fact it doesn't count migrants. So that's going to be part of the issue, is did we have a number of...
Now some people are saying
The birthplace of Geraldine Ferraro.
Where the hell are they?
If any storms were to spill into the Gulf of Mexico,
counted because the companies don't pay tax on it.
Yeah, I just got a ping. BLS has yet to release the highly anticipated report.
So, Mike, what I'm kind of sussing out here is that the BLS has released some revisions to the way it counts these jobs, but it wants you to do the math. I'm talking to Stuart Paul, who's a Bloomberg intelligence analyst, who says that we're not going to get the final re-benchmarking for months. So we were looking for, an easy number to go by. They've erased 600,000 jobs from the count of last year, or they've erased 1 million jobs from the count of last year. But we're not going to get that, is what I'm understanding today. Is that right?
No, that's not correct. We normally would get.
No, by the way, everybody's spamming 306,000. That was last year. 306K was last year's number. It just happens to be exactly the same. Don't know about that. Yeah, I think that's false. So just to be clear, it says non-farm 306, total private negative 358, but those were the revisions published August 23rd, 2023. We just still don't have this.
Set of preliminary revisions to payrolls that we have all been looking for. But Mike McKee, just give us some context here, because we've been watching the monthly jobs figures come in, you more closely than most, and it's been all about the revisions for months. So give us some context on what the typical range of revisions to the prior month typically is, and what we've seen over the past 6 months or so. How unusual truly is that?
Well, the revisions that we get on a month-by-month basis are based on different criteria. They're based on the fact that more companies get their numbers in a little later, and so the BLS has more data to work with. This tax-based revision is only done once a year, and it's for prior months. So there's a difference between the two things, but you're right. everybody is focused on the revisions. Now, historically, this tax-based revision, this once-a-year revision, has suggested both gains and losses. As I mentioned earlier in the show, the biggest number we've seen in a while was 2019, when jobs were revised down by 500.
This is a scam.
Since the pandemic, it's been very difficult to get an accurate read because we had something like 800,000 jobs returned when the pandemic was over, but that was obviously because of the pandemic.
All right,
So
Mike McKee in Jackson Hole, I'm sure we'll be speaking to you soon. As we await for this data, this is Bloomberg.
Yeah, no, everybody's confused. I mean, Bloomberg's saying it's not out. No, nobody has it.
Of Pioneer, which was unfortunate in my view, because that was a great stock for shareholders. That was a pure play on oil. They had a return of capital program that really gave you a taste of the upside of oil prices, which is now going to be gone. But Exxon, of course, very, very aggressive as well with their dividend and the like. Chevron, though, bogged down by the refining margins that have been impacted of late. But look, we had the halcyon days for a while there after the Russian invasion of Ukraine. All those fears got priced into the market about supply disruptions. That's gone. But these companies are still in a terrific operating environment. I mean, $75 oil is not cheap, in my opinion, and neither is $3 plus.
Labor Statistics, Quarterly Census of Employment and Wages, QCW, information line. Please leave your name and number. Someone will contact you within 2 business days.
2 business days? I'm not leaving a message for 2 business days. Somebody's like, who are you calling? I'm calling the Bureau of Labor Statistics.
What the news is. John, good stuff as always. Good to see you. John Kilduff, thanks.
Thank you very much. Great to be with you.
Let's get a news update this morning with Silvana Hanau. Hey, Silvana.
Hey, Carl. Good morning to you. The legal team for President Biden's son, Hunter, is expected to appear in a California courtroom this afternoon, just weeks before he's set to stand trial on federal tax charges. The judge will weigh in on a weeks-long fight between the defense and prosecutors over what evidence and testimony jurors should be allowed to hear.
This is stupid.
Get all the channels you want.
Chicago, authorities say Joshua Zimmerman was just blocked from the Democratic National Convention, though there was no indication of any connection to the event. U.S. Marshals say Zimmerman was being held in Mississippi on attempted murder and armed robbery charges and was also awaiting extradition to Texas, where he's charged with murder. And sources tell NBC News divers in Italy discovered the bodies of 2 people inside a super yacht that sank in a violent storm off Sicily Monday. The victims have not been identified, but we do know British tech tycoon Mike Lynch and 5 others were believed to be trapped in the luxury boat's hull. Carl, I'll send it back to you.
Silvana, thanks. Coming up after the break, Netflix shares all-time highs yesterday. Can that rally continue? We're going to break things down with one analyst who says yes after this.
Here, come say hi really quick. Say hi. We're all waiting for data, but there's no data. They're 30 minutes late now. We've just been sitting here confused for 30 minutes. Apparently, they're still revising the data. They're cooking the books. They're rigging the scam.
That thing looks good as YouTube.
Yeah.
And that one was...
Yeah. I added that to make my job a little easier over here. Have fun at school. Okay. Thank you. Okay. Well, could this have something to do with the Democratic National Convention? I don't know. God, this is crazy. Well, I mean, we waited 30 minutes for it, and it's still not out. So, I feel like that was a little wasteful. Yeah, nothing here either. They're literally showing server robots. Like serve robots. So maybe releasing the job numbers is hate speech. Oh, no. This is crazy. They always update the number on time, or at least like within a minute. And we just got nothing here. Yep. Somebody didn't update the website. All right. Very well. Oh boy. I will see you all later. I don't want to wait anymore, so I'm going to push the button, unless it happens to come out in a moment, but the Qs aren't happy. I mean, look at that volatility. It's kind of wild. Yeah, even Tesla just dipped down a little bit.
Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in securities, potentially including those mentioned in this video. However, I have no relationship to any issuers,
818,
nor am I presently acting as
all
a
right,
market maker.
a little more than expected there. Minus 818. So I'd argue that's a little bit more so than the market was looking at. Looks like the data finally, like the second I hit the button, 818 comes out. That's interesting. Oh yeah, here they are. Yep. 818 non-farm, 819 total private. You got revisions down in manufacturing by 115,000. You got transportation, warehousing actually revised up. Professional and business services. There's that blue collar side. Blue collar workers down 358,000. Leisure and hospitality down 150. Wow, the blue collar side really got whacked. Manufacturing down 115,000. I mean, market's kind of like blasé over this. So pretty nominal here. Yeah, 818. Seems like I don't know if the news has really been disseminated yet, but that's it. Oh, there it is. Now they're talking about it.
So there are consumer names that are doing very well here. Not so strong, of course, the department stores. They have perpetual laggards in the retail space. Macy's down 13%. Their earnings there. Dillard's, Nordstrom, Kohl's all down as well. That's on Macy's here.
32 minutes late. How wild. Okay.
What's going on here? Never missed the chance to talk about ETF. Spider Retail ETF. This is the big one. This is an equal weighted index. There's about 100 retailers here. Again, this is all equal weighted. So everything.
All right. Well, there it is. We got the data just as I was about to bail. The market's kind of chill. I mean, Tesla's slightly red on this. It's under the 221 line. You've got, what are yields doing? I'm not really seeing any. I mean, I think this is mostly just kind of in the middle of the expectation, right? The expectation was between negative 600 to negative $1 million. Got negative 818, so it's kind of right in the mid. All right, I'm going to go say hi to the kids and make some more coffee. Thank you very much. You want to say goodbye to everyone? Oh, can I have a bite of that?
Sure.
Yeah? Oh, that's nice of you. So, I don't know what took them so long to cook the data, but I'm going to have a bite of this chicken nugget. Thanks, buddy. Oh, it's Rick. Let's listen to him share.
At 818,000. Now, this is a preliminary benchmark revision by the Bureau of Labor Statistics. The actual final revision will be in February of next year. And as you look at intradays of 2-year and 10-year, look at the amount of volatility, especially in twos, most closely associated with the Fed. It's been down as low as 392. It was up as high as basically 4%. Also volatility in the long-dated treasuries, but not nearly as much. Why is this such a big deal? I'll tell you why. Because the handoff from what the Fed is looking at, from basically an inflation-driven notion of a trigger to ease to a weakening labor market. Well, if in one fell swoop we just took away 818,000 jobs, what does that mean for the foundation that the Fed built its keep rates higher for longer house on. And I've been talking about this. Traders for most of the last year have thought these numbers have been running rich. We've all seen revisions. This goes above and beyond that. So 818,000 is the number. It's definitely on the high side. And I would look for this particular data point to most likely put the session lows and yields in for the day. And don't forget, we still have a 20-year bond auction at 1 o'clock Eastern that may get affected by this news. Carl, back to you.
We were just talking with Bob here at the desk, Rick, about some of the estimates about this revision. I know Goldman was somewhere in the 600K to a million range.
You could drive a truck through that. Thank you very much. Which, by the way, 800,000 is exactly in the middle of their estimate there. So I'm not sure this is terribly much out of the range of what people were expecting, given how difficult it is to forecast these kinds of things.
Comes ahead of Fed meeting minutes tonight.
Yeah, and I don't think we're expecting too much from that. The sense here on the floor is everybody is expecting Powell to lay the groundwork for rate cuts, to talk about job growth still there, but slowing down a bit. The economy's still strong, but slowing. It's that Goldilocks scenario that I think people are still anticipating to hear from Powell. So far, I haven't heard anything here, including these revisions, that would indicate he's going to say something that's dramatically different.
Rick, does the bond reaction tell you anything material about that print?
No.
It really doesn't tell me anything material about it. I think the volatility is what tells me the most, and the fact that, benchmark revisions this time of year and in February are mainstays in the Treasury complex, but I've never seen so much attention paid. So I guess really to answer your question, it really does have potentially big implications as we go into Jackson Hole and see what some of the Fed personnel think about this revision, and it really does have to play havoc a little bit with how they want to proceed. In my opinion, there's many things about this that pretty much cement the rate cut in September if it wasn't already two bricks stuck together already.
Hey, Bob, just coming back to the broader market, everybody's got their statistics they can cite for why the rally will continue. One is that every time in the last at least 5 times we've had an 8-day winning streak. Yeah. We've had a very strong year overall in the market. And we are, up 18% on the S&P, the possibility of back-to-back 20% years. Just wanted to get your thoughts.
Extremely unusual. Again, the historic average for the last 100 years is 8 to 10% gains with 1 to 3%, and that includes 1 to 3% dividends that are in there. So you can figure average numbers 6, 7, 8% gains on the year, excluding dividends. 20% year, I can get you the numbers, but that occurs fairly rarely. Just like a down 20% year occurs fairly rarely. The market goes up 75% of the time. 3 out of 4.
Look at the Qs there for a second. That's a crazy little buy spike or something there in the Qs. Buy! Qs up now about 60 basis points. Palantir's up. Tesla's up 40. Space Mobile's up. Going to 60K on BTC. AMD's up 60 basis points. Apple went up 50. Meta's still up 1.8. Let's see here. Well, Enphase stuck at 119. Nvidia's up. Oh, Nvidia popped. All right. Yeah. Interesting. Kind of wild. Anyway, all right, I got to go. Thank you so much for being here, folks.